Welcome to Ask the Lawyer radio podcast with attorney Brian Figueroa of the law firm Figueroa and Associates. This podcast features a recording of our most recent radio show aired weekly in New York City. We hope you enjoy the show, which features news, views, and interviews on matters such as immigration, personal injury, bankruptcy, divorce, family law, estate planning, wills and probate, deed transfers, civil rights, criminal defense, workers' compensation, and taxes, both individual and business. You can contact us at 855-768-8845 or visit us at www.askthelawyer.us. You have questions? We've got the answers.
As older adults navigate financial planning, one of the most significant assets they own is their home. In situations where additional funds are needed, especially to cover long-term care costs, home equity can be a valuable financial resource. However, accessing home equity requires careful consideration, as different financial products come with varying risks and benefits. The three main ways to tap into home equity include home equity loans, home equity lines of credit, HELOCs, reverse mortgages. Each option has its own set of requirements, repayment structures, and potential drawbacks. This podcast explores these methods in detail, helping homeowners make informed decisions while also emphasizing the importance of estate planning and legal counsel. Understanding home equity and why it matters. Home equity represents the portion of a property that the homeowner truly owns, calculated as the home's market value minus any outstanding mortgage balance. Over time, as mortgage payments are made and property values increase, equity grows. Many homeowners find that their home equity is their largest financial asset, making it a crucial resource when facing financial strain. However, using home equity requires careful planning, as improper use can lead to significant financial consequences, including foreclosure or loss of assets. Option 1. Home equity loans. A home equity loan, often referred to as a second mortgage, provides a lump sum of money that is repaid over time with fixed interest rates. Advantages of home equity loans. Fixed payments. The predictable monthly payments make budgeting easier. Lower interest rates. Compared to personal loans or credit cards, home equity loans often come with lower interest rates. Lump sum disbursement. Ideal for covering one-time major expenses, such as medical bills or home renovations. Disadvantages of home equity loans. Repayment obligation. Borrowers must have a stable income to make monthly payments. Risk of foreclosure. Failure to repay the loan can result in the bank seizing the home. Equity reduction. Since home equity is used as collateral, homeowners risk losing a portion of their investment. Who should consider a home equity loan? A home equity loan is a good option for individuals who have a steady income to make regular payments, need a large amount of money up front for specific expenses, are comfortable with the long-term obligation of repaying the loan. Option 2. Home equity line of credit, HELOC. A HELOC works more like a credit card, providing a revolving line of credit that homeowners can draw from as needed. It has a draw period, usually 5 to 10 years, during which borrowers can take out funds, followed by a repayment period. Advantages of a HELOC. Flexibility. Borrowers can withdraw funds as needed rather than taking a lump sum. Lower interest rates. Compared to credit cards or unsecured loans, HELOCs often offer competitive rates. Only pay for what you use. Interest is only charged on the borrowed amount. Disadvantages of a HELOC. Variable interest rates. Payments can fluctuate, making budgeting difficult. Repayment obligations. Once the draw period ends, borrowers must repay both principal and interest. Equity reduction. Similar to a home equity loan, HELOCs decrease available home equity. Who should consider a HELOC? HELOCs are best for homeowners who need ongoing access to funds rather than a single lump sum, are financially disciplined to manage a line of credit. Understand that interest rates may change over time. Option 3. Reverse mortgages, the last resort. A reverse mortgage allows homeowners, typically 62 and older, to convert their home's equity into monthly payments, a line of credit, or a lump sum, without needing to make monthly payments. Instead, the loan is repaid when the homeowner sells the home, moves, or passes away. Advantages of reverse mortgages: no monthly payments. Unlike home equity loans or HELOCs, there are no monthly repayment obligations. Supplemental income provides financial stability for retirees. Flexibility. Funds can be received in different ways: monthly payments, lump sum, or credit line. Disadvantages of reverse mortgages: loss of home ownership. If the homeowner moves out for more than 6 months, non-medical, or 12 months, medical, the loan is due, and the home may be lost. High fees and closing costs. Reverse mortgages come with significant upfront costs. Impact on estate planning. Upon the homeowner's passing, heirs must repay the loan to keep the home. Who should consider a reverse mortgage? A reverse mortgage should only be considered by retirees with limited income but substantial home equity, individuals planning to stay in their home indefinitely, those with no other viable financial options. The importance of estate planning when using home equity. Because home equity is often a major part of an individual's estate, tapping into it can have consequences for heirs. Before deciding on any of the above options, homeowners should consult with an estate planning attorney. Key legal considerations: wills and trusts. Ensuring homeownership and inheritance are legally documented. Power of attorney. Protecting decision-making abilities in case of incapacity. Medicaid planning. Understanding how home equity affects long-term care eligibility. For those needing legal advice, Figaro & Associates offers comprehensive wills, trusts, and estate planning services to ensure that home equity decisions align with long-term goals. Schedule a consultation today by calling 855-768-8845 or visiting www.askthelawyer.us. Using home equity can be a lifeline for older adults facing financial challenges, but each method has distinct risks and benefits. Home equity loans and HELOCs require a stable income, while reverse mortgages offer flexibility but may put homeownership at risk. Estate planning is essential to ensure that financial decisions align with long-term family goals. Consulting with legal and financial professionals can help homeowners make the best choice for their unique situation.
Time is precious, and so is your home. If you need to access your home's equity, don't make the decision alone. At Figaro & Associates, we specialize in wills, trusts, and estate planning, helping older adults make the best financial choices. Whether it's a home equity loan, HELOC, or reverse mortgage, we ensure that your home remains a legacy, not a liability. Protect your assets. Secure your future. Schedule your consultation today at Figaro & Associates, located at 26 Court Street, Suite 701, Brooklyn, New York. Call 855-768-8845 or visit askthelawyer.us now. Your home, your legacy. Plan wisely.